Hello there. Okay, today I would like to show you how much you could save in taxes using a short-term rental. Now, if you have not heard, owning and operating a short-term rental could actually help you save on taxes, even if you are a W-2 earner who is working full-time and buying real estate on the side. If we have not met, I'm Shea Fawale. I am a pediatric anesthesiologist. I love to chat about real estate. And this is sort of like just my way of letting the world know sort of what people are doing out there that is helping them save on taxes and helping them basically live well, build wealth while enjoying their lives. So the short-term rental tax strategy, I've actually gone pretty much in depth in a different video. However, in this video though, I want to actually show you how the math actually maths, right? So that you can actually learn to estimate for yourself how much a property could potentially save you in taxes so that you're not just imagining what that number would be like. Now, I'm going to be the first to tell you, I am not an accountant, okay? I don't play one on TV. I don't play one on YouTube. I do not play one even in a podcast. I am a pediatric anesthesiologist, but I'm showing you the kind of quick and dirty math that I use in my head when I am evaluating a property to see how much I could save, to see if it'll be worth my while, right? Second warning is you don't let the tax tail wag the dog, okay? Because the tax savings are basically a mathematical situation, right? However, if you buy a crappy property while trying to save on taxes, you are stuck with a crappy property, okay? So don't do that. Make sure the deal actually pans out. Make sure that you understand how the deals actually work. And we have an entire coaching program. We have courses and programs that you can take and learn how to buy decent property, how to operate, how to manage, so that the tax savings become like beautiful, extra sweet icing on the cake. They are not the cake themselves. They're good. They're delicious, right? Like when that check hits your account, like you did on my birthday last year, that's some really good money, right? What? It's so good, but it's not the cake itself. The cake itself has got to be good, okay? The cake itself has got to be good. So if you would like help with actually getting that first short-term rental, be sure to apply down below on the link that I'll leave in the description or in the show notes if you're watching the podcast. Now, the third, which is probably like the first thing that I said, is this is quick and dirty math. This is not facts. Now let's actually get started. Okay, so what I'm about to share with you is the same kind of math that my clients here use to get these testimonials or these scenarios. The first one here said, I wanted to give you the happy update. Working with Ryan, Ryan was an accountant that I sent her to, said I finally got my taxes done correctly. Let's make it a little bigger. I finally got my taxes done correctly and went from owing about $17,000 in just federal taxes to getting back $24,000, including federal and state tax return, bringing me down a tax bracket with the cost segregation and tax savings from the short-term rental. She said, thank you for all your patience and guidance in helping me, okay? So without this strategy, she would have been paying $17,000 as a extra taxes, right? But because she got this done, she got not just the $17,000 erased, but got back an additional $24,000. So basically this strategy was responsible for about $41,000 in tax savings for this client of mine. Okay. What did I teach her? How to get the actual cake, the actual short-term rental. Okay. So that she could then go to her accountant and get this part done. Okay. All right. So now, there are others here. This one here, got back $3,000. This one here actually ended up getting back $170,000 in tax as a tax refund. But now let me actually show you how the math plays out. The first thing about the tax savings from a short-term rental is that, number one, it's based on how much depreciation that you can claim or how much bonus depreciation that you can claim in the first year of owning the property. In my last video, I went into detail about how the bonus depreciation works and all of that. So I'm not going to do that here, but I will just be showing you basically how the math works out. The first thing here is your purchase price. In this case, we're using an example of a $500,000 purchase. One thing you must know is that land does not depreciate. So you always have to account for the value of land. So keep this in mind, particularly if you're going to be buying a property that's like lakefront, beachfront, any of these like prime real estate, which is my preferred place to buy, by the way. But you need to know that those places, the land value will be higher. On the other side of it, a condo, for example, which has no land built in, this number will be 0 because you don't own the land. You own just the condo. So keep that in mind. If your goal is to max out your tax benefits, you want to make this number as small as you can. Like we have a property, it's lakefront, but the actual land is so small that like the property ended up being like the main thing. So like I was able to like win on both sides. Lakefront property, but tiny land, I'm fine with it, right? Now, when you have gotten the depreciable amount after subtracting the land value, the next thing now is determining how much could be your bonus depreciation in the first year. Now, I've spoken with a number of cost segregation specialists, and I asked them, like, what's possible? Like, what can people actually estimate? I know you can't give me hard and fast numbers because you actually have to like go to the house to see what's in the property, but like, give me some rough numbers here. Let's see how we're playing, okay? And 2 people at least told me that it usually falls somewhere around 25 to 30% of the depreciable value being able to, being bonus depreciated in the first year. So in this example, that means that out of 450, you probably get as your bonus depreciation somewhere between $112,000 to $135,000. Now, as you can see, it's a pretty broad range. I told you we're doing quick and dirty numbers here, okay? Quick and dirty. Now, this is how much of your income, of your overall income, gets sheltered. That said, in 2024, you now take 60% of this number to know how much gets sheltered. Because remember, there's like a fade out that's happening right now. The fade began in 2023 when we went to 80%, and then 2024, we're down to 60%. So 60% in 2024, that means that of this number, what you actually get to shelter in the first year, as of this recording, is this amount. Some people will say, oh, but then I would have liked to be here. Well, we're not there anymore. You should have bought your short-term rental back in 2022. I'm sorry, I'm not trying to be harsh here, okay? But think about this. You're going to be sheltering $67,500. Focus on what you actually have, right? And now when I say tax savings, your tax savings down here are now based on your tax bracket. So if you click here, you can actually see what tax bracket you fall under. If you don't know what tax bracket that you fall under, I have a link here that you can click to see your tax bracket. So this is by TurboTax. It's not my thing, but they just basically help you see what you're, so you basically plug in, if you plug in your taxable income, let's say that's your taxable income, right? And you're single, calculate, your marginal tax rate is 35%. You go back in here, you change this to 35%, okay? And so if we were in 100% bonus depreciation, that's how much you'd have saved. But right now we're in 60, we'll take it anyway, right? That's where you are right now. So if you're watching this, you're probably thinking, well, how can I get my hands on this, on this calculator right here? I got you, boo, I got you. Okay, because I'm gonna leave it down in the comments and you can get access to it. You probably just have to like enter in your, maybe name and email address or something. And yeah, and get into our community. All right, so that's basically in a nutshell, just to give you an example with the 2024 60% adjustment on how much you could possibly save with a purchase. Now, if you thought that I didn't think about the other direction, like, okay, I'm trying to shelter, my entire income. How much property do I need to buy? I also have the reverse calculator on a different tab right here. I got you, okay? So let's say you're like, I'm making an extra $200K this year from a side gig that I did. I would like to shelter that entire income from taxes. How much of a property do I need to buy? You can basically just come in here, only enter data in the yellow cells, and you will get your answer. Okay. All right. So I hope this has been a nice, quick and dirty video now. And if you are Excel savvy, Google Sheet savvy, you can definitely adjust and modify the document as you please, because I only allow you to make a copy. But I hope you found this valuable. If this has been useful to you, feel free to share with a friend. Like, share, subscribe, and I will catch you on the very next video.